The entire electric utility industry next year is expecting to invest $210 billion. Batteries are the only way we're going to get through this moment.
Lithium Americas, as well as Ioneer, Energy Source Minerals, how do you get comfortable that they're going to be 3 out of the 100 lithium winners? Welcome back to Rockstock Channel. It's Friday, November 7th, and we're privileged to welcome back Jigar Shah, the visionary who turned solar power into an investable asset class, co-founded Generate Capital, helps lead the clean energy conversation through his pioneering podcasts, and served as the head of the Department of Energy's Loan Programs Office under President Biden. Jigar joins us at a fascinating moment. We're witnessing what I've called America's Belt and Road Initiative. The DOE, the Department of Defense, and its new Office of Strategic Capital, as well as the Department of Commerce, are all mobilizing to rebuild and friendshore critical supply chains for rare earths, lithium, and advanced manufacturing. Before we dive in, a few quick notes. Our latest Lithium-ion Bull newsletter, titled Critical Minerals at Warp Speed, is now live. In it, I discuss President Trump's Asia trip and his first meeting with Xi Jinping this term, and how America is trying to accomplish in 3 years what China accomplished in 30. You could read it and subscribe for future issues at rkequity.com by registering your email there. And please note, we may reference some publicly listed companies that Matt or I may own personally in this podcast, but note we are not financial advisors and nothing in this interview constitutes financial advice. Please read the disclaimer at the end of this video. And before we begin, we'd like to thank our sponsors, Lithium Royalty Corp and USCF Investments. Lithium Royalty Corp, traded on the Toronto Stock Exchange, ticker symbol LIRC, holds more than 30 royalties on hard rock and brine lithium projects around the world, including Core Lithium in Australia, Sigma Lithium in Brazil, and Tre Q and Mariana projects operated by Zijin and Ganfeng in Argentina. And USCF Investments has been a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposures, broad diversification with SDCI, and thematic strategies such as ZSB for battery metals and USG for gold with income. To learn more, watch our inaugural episode with the CEO, John Love, or visit uscfinvestments.com. Now for today's discussion. Globally, Jigar, we're in what I've described as a G2 new bipolar order between the United States and China. 10 years ago, China launched Made in China 2025 and has largely achieved its aims across EVs, batteries, and critical minerals. Now, the U.S., to use Treasury Secretary Bessent's words, recognizes America was asleep at the switch and is moving at warp speed to catch up as it pertains to critical minerals. A Minerals Manhattan project, a coordinated mobilization of policy, capital, and technology is underway. So U.S. industrial policy has evolved from climate-driven goals towards economic resiliency and national security. It's not really about decarbonization anymore. It's about energy independence and manufacturing capacity. And private capital is now matching the public push. JP Morgan's $1.5 trillion Security and Resiliency Initiative and Orion Critical Minerals Consortium are just two examples. Much of what we do here at Rockstock Channel and at RK Equity is to connect dots, how government policy, geopolitics, and capital markets shape demand for batteries, electric infrastructure, and the materials that power them. I follow a lot of Washington, D.C. podcasts on these themes, and I listen to Jigar religiously every week on Open Circuit. I highly encourage all of you to tune into this podcast. In preparation for today's discussion, I re-listened to our first podcast together back in February 2023, nearly 3 years ago now. What stood out was that not once did I mention AI, data centers, or electricity demand. Nor did I use ChatGPT to help me with this intro, as I did today. But I did ask if the U.S. could do in lithium what it once did in oil and gas, go from net importer to net exporter within a decade. One of the last pieces you wrote at DOE earlier this year made that exact argument, and we'll dig into that later in this conversation. Just this week, 2 new critical minerals deals were announced involving the Department of War and Commerce. A $1.4 billion venture capital style deal for rare earths magnets with Vulcan Elements and ReElements technology, and now one for tungsten in Kazakhstan. Meanwhile, Chris Wright's DOE continues to approve or renegotiate or reconsider loans that originated under your leadership. With that intro out of the way, welcome back, Jigar. It was great to see you at Dervas in New York last month. And before we ask you a ton of questions, could you please tell our viewers what is that conference and organization and what's it all about, and what else you're doing at Multiplier and any other activities since you left the DOE?
Yeah, great to reconnect, Howard, and nice to see you, Matt. I think Multiplier basically just recognizes that the asset class that we're talking about here, whether it's mining, but also in the sustainability space broadly, what we're finding is that they have been funded via a technology venture capital universe, which, are not getting great exits. And so we have been focused on how do you get these companies better exits? How do you exit them earlier? How do you get them different types of capital stacks? How do you get them in a place where the CEO and the entrepreneurs are getting paid? Because for a lot of these companies, they are getting sold, but the management team, their stock is basically worthless after all the preferences, right? And so we're trying to figure out how a lot of these companies get better exits. And because I think our sense is that if this exit piece doesn't get solved, then early stage capital formation becomes a lot harder, right? Because why would people put money in early if they don't really see the exit path? On the Dervos piece, so I've been a big fan, I think, as you know, of demand flexibility for a very long time, right? I mean, I think many of your listeners may not know, but I think the way that the electricity grid operates, right, is that the electricity industry wants to make sure that on the worst hour of the worst day of the worst month of the year, it has enough capacity to be able to serve you in real time. That means that when you have a polar vortex or when you have a heat dome and everything is going, they can actually spin up a generator, transport that power via transmission lines and then via distribution lines to serve you. And that has turned out to be extraordinarily expensive, right? So to give you some context, the entire electric utility industry spent about $20 billion a year in CapEx for its lines, for all the stuff in 2003. Last year, it spent $178 billion. And next year, it's expecting to invest $210 billion, right? All to serve 1 hour of 8,760 hours. And what you saw Chris Wright talk about recently was that 98% of that time, the wires are 50% underutilized, right? Because you're not at the peak, right? And so the question is there a way cheaper way to serve that peak, that 1 hour, 12 hours, 22 hours, 100 hours, right? And you're finding that batteries, demand flexibility, all of those tools are 90% cheaper than just upgrading everything so you can serve them in real time. The electric utility industry is the largest commodity supply chain in the world that doesn't feature storage. So that was that conference at Dervos.
Okay. But what you just talked about there is very important as I'm trying to analyze and understand. Like I don't know the electricity sector extremely well, and have been
but
spending
it is a lot of growth
these...
for batteries for sure.
Exactly.
Yeah.
But and I hear you, and I hear and energy storage in China and solar and lithium companies are talking about it. CATL is talking about like the demand for energy storage is going to be much higher, is growing much faster, but overall may overtake that for electric vehicles. But when I hear Chris Wright, he talks in parasitic terms about renewables. He never mentions batteries, but he has a new proposed FERC rule which from what I understand, would support dispatchable energy and benefit
Yeah.
battery storage. So how do you square that? And then I also have a comment about like the AI czar, David Sachs, whose podcast partners on the All In podcast are, and friend Elon Musk are very supportive of batteries. He talks about nuclear, gas, and load shedding, but never mentions batteries.
In terms of power, so my understanding is that nuclear is going to take 5 or 10 years. It's just not something that we're going to be able to do in the next 2 or 3 years. So in the short term, it really means that like gas is the way that these data centers are going to get powered.
How do you square what's going on with the administration of common sense, to be talking about batteries and deploying them?
Yeah, look, I mean, we are in weird times, right? I mean, so, there are a lot of people policing people's language today. And so almost all of those people are serving an audience of one. They're not serving a much broader audience, right? And so I think they're all being careful that, while they're bashing solar and wind, because, the president has bashed solar and wind, they don't want to introduce the concept of bashing batteries because I don't think they want the president to bash batteries, because batteries are the only way we're going to get through this moment. And if you listen to Tesla's recent conference call, I mean, the mega packs, the mega block that just came out was a huge bright spot in their entire earnings call, right? So I think that in general, there is a recognition by everybody, including the AI data centers who are now located batteries in a lot of their data centers. And Iron Mountain decided to just back up their entire data center in New Jersey, and then another one that they're building because that was the fastest speed to power, right? And so a lot of the utilities are saying, look, as long as you can sign up to an interruptible rate, right, which is basically that for a quarter that you're talking about with Chris Wright, then we'll connect you next week, right? So like if you'll take power 98% of the time and we can disconnect you 2% of the time, and they're not going to disconnect you, might say, well, instead of 1,000 megawatts of load, we can only supply you 400 megawatts during this 10-hour block, and they tell you the day before, then you figure out how you're going to meet your needs, right? And so some people have said, well, we're going to buy basically repackaged jet engines and put them on site and run off of these repackaged jet engines, right? Other people are buying 30 megawatt turbines from Caterpillar, right? Caterpillar just announced that they're increasing production by 2.5x, right? Other people have decided to buy Bloom boxes. Bloom boxes stock went up 10x this year, right? And so, but what you find is when you take all of those solutions, the only one that's 90% cheaper than the business as usual case are batteries, right? Now, sometimes they get fully integrated into the utility system and the utility will pay you to use those batteries the rest of the time to help levelize their grid. And other times they're just dumb assets behind the meter that you use for emergency power when the utility cuts you off, right? And then that one is less profitable, right? And so we're going through this messy phase, and I'm very appreciative that Chris Wright and David Sachs, I think, just don't mention batteries, because the last thing we need is another uninformed meme, forming around technologies that, are otherwise extraordinary American inventions getting some sort of bad rap from, the MAGA base.
Okay. I didn't exactly follow why you don't want them to speak. You think they're speaking about batteries is going to elicit some negative backlash?
I don't think the MAGA base wants to get educated by David Sachs or by Chris Wright, right? They get educated by the president, right? And so I don't think Chris Wright and David Sachs know that if they mention batteries, whether, Donald Trump's going to come forward or against it. So I think they'd rather just not talk about it.
Right. Okay.
So I think they're just saying, let's leave sleeping dogs lie. They're like, let's not poke the bear.
Okay. I had reached out to you earlier this year and had hoped to have you on earlier in the year. But as the one big beautiful bill was going through, there was just a lot of noise and we didn't know how things were going to go. And it was just too confusing. But as I was listening to you, there was within the climate and clean energy space, there was all of this angst and lament and pessimism, but you've maintained an infectious optimism, and have highlighted the preservation of incentives for batteries and ESS in the one big beautiful bill, as reasons to be optimistic, despite a number of subsidies for EV, solar, and wind, and the IRA going away. I've asked here, like, what makes you so optimistic? I think you've talked a bit about it, but if you could just expand on that.
Well, look, I think if you take the one big beautiful bill by itself and just calculate all of the incentives that are in there for next generation technologies and how many companies are using them, et cetera, that bill alone would be the second largest climate bill ever passed by the US Congress, right? So I just want to make sure we're crystal clear, right? That like we went in to this fight basically, with the president saying we need to roll back everything that was in the IRA, right? Could have happened. Instead, what happened was 80% of all the provisions in the IRA were preserved within the OBBB, right? The electric vehicle tax credit was rolled back. A lot of the small residential tax credits for heat pumps and that kind of stuff was rolled back. And then solar and wind tax credits were phased out, right? And, so that'll phase out over the next 3 or 4 years, right? But everything else, like nuclear, geothermal, batteries, the 45X tax credits for production, right, for batteries, the 45Q tax credits for carbon capture, even 45V, the hydrogen tax credits were extended by a couple of years, right? So a lot of those tax credits were saved, right, which is great. Now, separately, the Trump administration said, we don't want critical minerals to go through the Department of Energy. We want them to go through the Department of War. And so the OBBB put a lot of money into the Department of War to be able to, fund critical minerals, right? I mean, that's their preference. I mean, I don't know that I have an opinion per se, but that's what they want to do. I think that one of the things that I find annoying, right, as you know, is that most of us in this sector are not political, right? We're not red or blue. We're just like entrepreneurs trying to like get stuff out of the ground, process it, make it into a usable product, sell it, make a bunch of money along the way, right? That's what the vast majority of people are doing, right? And they're just looking to read some tea leaves, right? They're saying, tell me what it is that you want me to do. What are the new rules? Because the Biden administration had very clear rules, right? The rules in the Biden administration were, and I don't think they were implemented well, to be clear, but the framework was set down, which was that we have 30D. 30D requires people to buy locally, right? That creates demand. And then once that demand gets created, then the loan programs office can provide loans to more mature companies. And for less mature companies, the manufacturing electricity supply chain office can provide grants, right, to those folks who are doing that work, right? And we were private sector led, government enabled, right? So unless Tesla and Stellantis and, GM and Ford were signing an offtake agreement for some of those minerals, we weren't really going to provide grants, right? So, or loans. So we're not really providing money to junior miners because those guys didn't want to buy from junior miners. They wanted to buy from, larger mines, right? Then, and sometimes, we got it wrong a lot, right? When you look at the 30D implementation, it really gave people a hall pass. So that people could get the tax credit, but not really buy locally. And so as a result, Syra Resources, right, in Vidalia, got screwed over by Tesla and General Motors because even though they were processing graphite and China clearly has a stranglehold on graphite, Tesla and GM thought that they could get it cheaper from China. And so, and still meet the 30D requirements, right? And so I think that was a big mistake on the Biden administration side. Now that you're going to the Trump side, the question is like, is it working? Some things are. I mean, like, I can tell you that all of the big automakers are scared out of their mind about Trump. And so they are magically buying more domestic materials. Like they're signing offtake agreements when my logic couldn't get them to do it. But now the fear is getting them to sign more domestic or at least diversified offtake agreements. That's great because you need offtake agreements to make the financing work. So that's good. I don't know what the rule set is. Like, for instance, like they're taking, ownership stakes in companies. I don't know why, right? And I know for a fact that the White House had no interest in taking an ownership stake in Lithium Americas and all that stuff. And, Greg Beard over at the Loan Programs Office made it his mission in life to screw over Lithium Americas. And the White House was actually quite confused as to why he was doing that. But in the end, they all sort of came to some agreement and everyone's happy and the stock price went up. And I think those projects are going to move forward. But I don't know what the next 10 companies are supposed to take from that experience. What is what exactly is the playbook to get the same deal for your company? I don't think that was revealed.
I definitely want to dig into that. Matt has a bunch of questions. I want to ask one more before he gets into those questions, and it weaves it together again with the David Sachs. He may not want to talk about batteries, but he was interviewed on the Mark Andreessen podcast, and it was a broad-based, long podcast. But the area, for AI and energy, right? He's the AI czar, and a big risk is, do we have enough electricity? And power needs? Next year, Energy, who you've cited and I've cited this as well, has said basically, and they do nuclear, they do gas, but they say solar plus batteries or renewables plus batteries is the cheapest and the fastest way to deploy. But David Sachs is basically saying the energy executives that he spoke to say that nuclear is the answer in 5 years. Natural gas, it'll take about 3 years. And in the immediate term, some 80 gigawatts could be made available simply from load shedding from the existing grid, about 40 hours per year.
To backup generators, to diesel, things like that.
Which is batteries.
So, but okay.
I mean, it's not load shedding. It's not like you're shearing a sheep, it's actually, it's batteries, right? That's a euphemism for batteries, right? Look, the thing that I've learned in life is that people say things because they have, like I said, an audience of one that they're talking to. They don't care about the rest of the people who are actually listening to that podcast. And so I don't know what to tell you. I talk to people all the time. When you buy natural gas turbines that are not combined cycle gas turbines, right? That's a 5 or 6 year wait list, not 3, right? If you buy gas turbines that are not combined cycle gas turbines, those are far lower efficiency gas turbines. On top of that, if you want to turn on a system off grid, right, which some of the people are saying that they want to do, then that means you have to double up the gas turbines because the gas turbines are not reliable. They run 55, 60% of the time, then they shut down, right? So then you need 2 gas turbines next to each other, one to run when the other one's not working, right? That easily gets you to $190 a megawatt hour, right? 19 cents a kilowatt hour, right? And so fine, you want to just do it, whatever. You're spending $22 billion for a 1,000 megawatt data center. If you want to spend, a bunch of money to pay $190 a megawatt hour for natural gas, you do whatever you want to do, go with God, right? But my thing is that ultimately at some point, you're going to want to reduce that cost down to $80 a megawatt hour. And that's solar plus battery storage. Okay, great. So let's do that, right? Now, some of them might say, well, I really want to be a part of the nuclear revolution. Great. So then say, great, we're going to sign a contract that starts in 2035, which is not 5 years, it's more like 10 years. And we will start paying $125 a megawatt hour for power from that nuclear plant if and when it turns on in 2035. And in the meantime, we'll use solar and battery storage, or we'll use natural gas backup. We'll do whatever we want. All I can tell you is that energy executives say all sorts of things, right? But the Energy Information Administration is actually in charge of giving you facts in the rearview mirror. And the facts are that over 80% of everything that got added to the grid this year is solar, wind, and battery storage. And so so I don't know what talking points people are using, but their own EIA, which I'm assuming they could manipulate if they wanted to, is saying as of about 4 weeks ago that 80% of everything added to the grid this year was solar, wind, and battery storage.
Great. Okay. Thank you for that answer, detailed answer. Matt, why don't you go ahead? You have a bunch of other topics.
Okay, maybe I'll just drop one in here because I think you said something really interesting, the answer to 2 questions ago, which is basically that you said that the administration and large companies want to deal with large miners. Now, potentially that works in industries like lithium and copper and aluminium and to some extent in rare earths. But in the other critical material industries, they're such small industries that you just don't get large miners operating in them. So how is it going to work when you have to, the government and companies has to deal with juniors?
Well, I thought this was the great innovation that the Trump administration has brought in, right? Is I think they're saying, I mean, I don't know what they're saying. I'm trying to make sense of what the random pieces of information that I'm getting. But my understanding is what they're saying is they want to create like a strategic stockpile. So the way that you protect the junior miners is you say, the Department of War is the offtake, right? And so they're actually just buying all the material. And then once the material is there and it meets whatever it is, 3 nines, 4 nines, 5 nines purity, well, then you can actually then sell it into the marketplace, right? Presumably. So I think that's what they're saying. And if that's what they're saying, I think that's an alternative to the 30D framework that the Biden administration puts in. And frankly, the 30D framework did not work that well, even though I think it could have been improved, but I don't think it worked that well in getting the offtake agreements. And so if the improvement that the Trump administration is doing, where the Department of War becomes this strategic petroleum reserve equivalent, then that could also support capital formation.
Okay. Interesting. Okay. So I heard you say on a recent podcast that you think that China's overplayed its hand on rare earths. Can you give a little bit of background and just explain why you think that's the case? That's obviously after the deal that was signed recently.
Yeah. So I think when you think about what happened, this whole strategic framework, as you know, comes from the Arab oil embargoes of the 1970s, right? Everybody created all this national security framework on energy stuff based on that. And even there, I think that the academic literature will tell you that the Middle East overplayed their hand there. And as a result, actually weakened their power and didn't get what they wanted. And then in the end, compromised by, depositing all of their excess funds into New York banks, right? That's sort of how you got the petrodollar. I think that in general, this is actually quite a bit different than the Arab oil embargo, because the Arab oil embargo is really, there are certain places like Saudi Arabia where you can put a straw in the ground and get oil out of the ground. Not anymore, but you used to be able to, right? And so, but today, like rare earths processing is not impossible to do. Now, some analysts say that it'll take 10 years to replicate what China has created. Some folks think you can do it in as little as 5 years, depending on how much value you provide to a lot of the grant programs that the Biden administration put out to early stage companies that are doing really next generation technologies. Because we all know that the Chinese are doing this all through brute force technologies from 30 years ago. There's no real innovation there. But we actually have ways of, sorting some of these rare earths, et cetera, out of mine tailings and lots of other things using next generation technologies, right? They're at least 5 years away from full at scale production, but they show promise of being far more cost effective than what China's doing. And so as a result, like there's no like physical reason like oil where it's like, well, this country has reserves, this country doesn't have reserves. All of this material is coming from lots of different countries around the world, and they don't actually care to sell it to China. Like they're happy to divert it to other countries. They just need it to get processed because they're in the business of selling rocks, right? And so now I think that China has overplayed their hand. My sense is that, as much as Trump has alienated a lot of our allies, they all are now coming around to our point of view, which is that they need diverse supply chains, right? I mean, like when I go to Europe, or even as recently when I went to Canada, folks were not like as bullish on national security as I am, right? Like they were like, well, I don't know, it's like half the price to get it from China. We might get it from China. I was like, what are you talking about? You just had this Russia-Ukraine conflict. Do you not understand like how energy security works? Like, even if it's 4 times the cost, you have to process it yourself, right? And so, because as you know, it's $170 million or $190 million of rare earths that power $500 billion worth of finished goods in the United States. So you could afford to pay 4x, and it really wouldn't matter. It's really about security of supply. But now that China's overplayed their hand, when I talk to my friends in Canada or the EU, they're like, okay, yeah, we're fully on board. We get it. Now we have to diversify supply chains. We'll see. The proof is in the pudding. We'll see whether, they sign the contracts and do all the things we're saying. But I think that China no longer will be given a pass for having this concentration of these, these important sectors.
Yeah, I understand where you're coming from. I mean, my view would be that I think that the Chinese probably at the end of the day, they just want to have enough material to supply themselves. And the export market is a bonus for them. But realistically, they want to be able to supply their own industries and take it from there.
So that used to be the case for sure. I completely agree with you going into 2020. I don't think that's true today. Like, I think it is very clear that they're overproducing for their own domestic usage as well. Like, I mean, there's no way now that they've gotten rid of all of their subsidies for solar panels in June of this year, there's no way they're going to use a terawatt of solar panels in the domestic market.
Oh,
right?
no. I'm sorry. I should have been more clear. I think the Chinese government wants to safeguard domestic supply. Yeah. I completely agree with you that a number of Chinese companies are out of control.
Totally. They're not listening to the central government. What do they say? The mountains are high and the valleys are deep.
Yeah. Okay, cool. So I was wondering a little bit. I mean, you've been pretty close to the cutting edge on EV and battery technology over the past few years. I've read some of your stuff. I've seen some of your podcasts. Do you think it's going to be worthwhile for US companies to try to innovate new solutions in battery cathodes, for instance, in particular anodes? Or do you think that adapting the existing technology is the better way to go? I mean, I noticed that the Chinese strategy has very much been to take the previously invented Western technology and improve it. Should we go our own way because that's what we've been trying to do for 5 or 6 years and it hasn't been overly successful? Or should we take what's already in the market and then as a base and then try and improve it from there?
Yeah, I mean, look, I think 5 or 6 years is not a long time, right? I think when you look at what China has accomplished, it took them close to 20 years, I think, to build that entire supply chain and do all that work, right? So I think that we should give ourselves a little bit of a break in terms of how long it'll take us to do that. I do think that the entire world, right? It is very clear to me that 100 years from now, that all of these technologies will be the most dominant, right? And so I don't think we want 90% of them coming from China. And so I think diversification does matter. Then the next set of questions are like, where is there room for innovation, right? So in the solar panel space, you've got perovskites. But that technology seems more stable, right? Sort of 23% efficiency, and maybe you get to 27, but I'm not sure you get to 40. I think batteries are in the early innings. Like, I mean, when I look at the technologies in batteries, I mean, we're not even in 2.0, in my opinion, right? And so when you look at like technologies like Sila Nano and their cathode technology, or you look at the anode technology, and you look at the other folks, right? I mean, I think we have the ability to double at least the density of lithium-ion batteries from today with our next generation technology that China doesn't have access to. But I do think we have next generation technologies, and I think it matters, particularly in mining. When you look at mining, like lithium, for instance, is one of the dirtiest processes in the world to convert lithium ore into lithium hydroxide, right? And we have next generation technologies with DLE and other things that are far cleaner approaches. The same thing's true with rare earths. When you think about like how much waste material is created to create 5 nines purity out of China, we have approaches where we can actually target the rare earths and actually pull them out and extract them out of mining tailings.
But the problem with both of those technologies that you've mentioned is they're not in commercial production. I mean,
No,
we've
but then
been
we're 5
talking
years
about
in.
them for 5, 6, 7 years, but they're nowhere near commercial production.
Totally. We're 5 years in. I mean, I don't think there's any shortcuts to what I'm suggesting, right? I think, China took 20 years to get here. I think we're going to take maybe 18 years to get to where we need to go. Maybe we'll be 2 years faster, but I don't think it's going to happen in a week, right? But I think it matters. I think to the extent that you believe that oil and gas are an essential part of geopolitics today, I think that batteries and critical minerals and mining and rare earths are going to be a critical, like differentiator on geopolitics going forward. And so I think that, and I think the US will win in the end, because if you go to the countries that the Chinese have bilateral deals with, they all hate working with the Chinese, every one of them. They're like, it's just a commercial transaction. They give us this, we give them that. They don't care about our people. They don't care about skills transfer. They don't care about our broader issues. They just want what we have. They pay us, we give it to them. That's it, right? And the US has a long history of caring about the education of their population, figuring out how to help them with other environmental issues, like all these skill transfer things, et cetera. And so, but the US wasn't in the game. And so it is what it is. Now the US is in the game. Now, do I think the Trump administration cares about the well-being of all of these countries? I don't know. I think some of the people they send there do. I don't know whether the administration itself does. And so this is going to be a hearts and minds game fundamentally. I think we can play to win, but yeah, I'm not disagreeing with you, Matt. This is a steep climb in front of us.
So I mean, this raises an interesting question, because you're basically saying and agreeing with many people that this could be a 5 or 10 year event. Do you think the Trump administration believes it can be a 5 or 10 year event, or do you think it thinks it can be a 1 or 2 year event? Because it sort of seems to suggest it's like click its fingers and bang, it's going to happen.
I think that it depends on which event you're talking about, right? And so achieving the full diversification with modern technologies at a cost competitive point is certainly, as we've established now, 18 years, right? Whatever that is, right? I think now there's interim milestones to getting there, right? I think the Trump administration broadly has decided to use a methodology which they invented in Trump 1, and frankly Biden kept it in place, and then Trump 2 is going even higher around the use of tariffs around strategic materials, right? And so the Trump administration put tariffs on Chinese steel. The Europeans decided not to. The Chinese flooded Europe with cheap steel. Then the Europeans were like, hey, this isn't going to work for our steel industry. So now the Europeans have put tariffs on Chinese steel. You're starting to see steel makers around the world start putting tariffs on Chinese steel. So you could imagine that slowly but surely, and over the next 1 or 2 years, this could be accomplished. You could re-establish the framework that the Biden administration put in place to box in China, right? And box them in and say, look, all of us are putting 100% tariffs on the stuff that you're dumping. You're clearly dumping this stuff, right? Like we're all capitalists. Like, now that you've secured the market, raise the price on your stuff by 2x and actually like make some profits for once. Like, we're tired of you like supporting 100 companies. 94 of them are going out of business, and the 6 that are left are selling their product at a 10% gross margin. Like, why don't you like increase your prices so that we actually have a true global price that we can all compete under, right? And I think that could be accomplished over the next 2 years. I think we could get the Chinese to move away from their version of warped capitalism to actually start to do this, because it's not just us. I mean, Ethiopia has a solar manufacturing facility. India has production facilities. Turkey, Jordan, and all of them are going bankrupt because of what China's doing on their supply chains, right? And so they're losing all of their industrial capacity. So I think there's a lot of countries that want to work together, even though the Trump administration has not made it easy to work with them.
Okay. I'll come in with one final question, because I can see Howard's champing at the bit here. So I think the US has great resources of a lot of critical materials.
Yeah.
But a lot of critical materials it doesn't have resources of. So it's going to have to rely on its allies for access to some of these materials. How easy do you think that's going to be given that the current administration has spent the last 9 to 10 months alienating a lot of its allies. I mean, I saw a survey recently that said, I think 45% of the UK population does not trust America. And that's up 20 percentage points from just a year ago. And that's all because of the current administration's strategies. Do you think it's going to be easy for the US to project its power in the world in the way that it has over the last 5 to 10 years or so?
Well, no, I mean, I think it obviously is going to be harder, right? I mean, we have burned some of those bridges in ways that, were wholly unnecessary. I mean, I do think that the argument that I'm making is less one of, U.S. exceptionalism and more one of, we have a common, set of goals or, like things that we're trying to accomplish. And so as a result, like, let us make common cause under these particular things that we're doing. So I think that you could see the UK or the EU or Canada or Australia, as you saw with the agreement between the US and Australia, working together in a way that, also respects the fact that, like the Albanese government in Australia, like, got reelected on the back of being anti-Trump. So, like, I don't know that he's super pro-Trump, but he is super pro not just continue to sell rocks for the rest of time to China, right? And so he wants to, do more value-added services in Australia, and he realizes that the market commitments that the Department of War are providing might be the way to actually bridge some of the capital needs that he needs, right? Because he needs an infrastructure type financial structure, and he can't seem to put one of those together without the U.S. buying some of that finished goods and finished products, right? So, yeah, I wish we could do it because, we actually had the same values and everybody were trying to just work together as friends. But, I don't know that that's happening right now.
Okay, thanks very much. I'll hand over to Howard.
Before I get into my questions, I'd like to thank again our sponsor, USCF Investments, who've been making it easier to get exposure to commodities investments for almost 20 years. USCF's Sustainable Battery Metals Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And thanks as well to Lithium Royalty Corp., which just published their Q3 results, which demonstrated 86% growth in revenue from last year's third quarter, and also included the first royalty payment from their 3Q project operated by Zijin Mining in Argentina. To read that press release, visit their website, lithiumroyaltycorp.com, and follow them on X at lithium_royalty. Going to that latter point, I was just thinking, like, we're collaborating with, it's vested interest, right? But in Australia, you have, like, I'm just wondering, to what extent do you think, like, this interplay, like, we've punched China hard, and they've punched back hard, and rare earths has become like this critical, this Achilles heel, and now there's like a 1-year reprieve, but and there was a lot of positive talk coming out of the meeting last week with Trump and Xi, and they're going to meet again next April. So I'm just wondering, is there a potential here, like, that we could partner with China, on ex-China projects? For example, Albemarle and Tangxi in Greenbushes, right? You mentioned 30D was implemented badly. Albemarle didn't, you can't use those rocks that are in Australia because they're partnered with, Tangxi. But then there's like Zijin and Ivanhoe mines, in the DRC. Would you advocate for, like, I've been thinking that maybe, the way that we can catch up is, like, learn from China or let China invest. BYD, CATL, Ganfeng build, car factories, battery factories, lithium hydroxide plants in America for ex-China usage. Would you advocate for that? Do you think that that's a worthwhile thing to do?
I mean, I would say that there are people that are far smarter than me on this, and so I want to make sure that we're clear that, like, I don't know that I'm a global expert in all these things. I'd say that we brought the Koreans and the Japanese into the U.S. under the IRA to be our partners to help, create sort of this, um, uh, you know, uh, coalition to stand up to China, right? And so the battery manufacturing facilities were built by like Samsung and LG and SK, et cetera, right? There were a lot of the companies that we did that the Japanese invested in as well. On the solar side, we did do a lot of work with the Chinese, right? So Trina, Jinko, a lot of those folks have built huge facilities in the United States. We then, had the FIAC requirements, and a lot of them sold those facilities to private equity, right? So that the ownership is now U.S. or whatever else, and then like they're being hired back to do, some of the training and like to operate the facilities. And so there's some things that we did go through, right? The CATL battery factory, if you remember, and the hullabaloo over that with Ford, right? So I do think that there are some of these business models that we're trying to figure out. I think the Biden administration, I think, did do a good job of getting everyone in the world to gang together to say to China, your overproduction is unhelpful, right? That we all want local production, whether it's Brazil or South Africa or India or other places. Like everybody wants to get into value-added services. The fact that you have it's not that they have a lead. I don't think anyone begrudges the fact that they have done a good job of becoming great manufacturing companies. I think what people begrudge is that we have a set of global values that China does not subscribe to, right? And that, I think, is a huge problem, right? China is fine with their local provinces wanting so desperately to have the national champion in their province that they will stand up 100 manufacturing facilities with 2% interest financing, and then 94 of them will go bankrupt. And then the profits that are made by the 6 that stay around are not nearly enough to pay back the losses. So every single strategic sector that they go into, they plan to lose money for the rest of time, right? Like if you look at a solar panel, those companies do not like make money day in and day out. They have like 90% of the entire world market of solar panels. If they charge, instead of 7 cents a watt, they charge 12 cents a watt, no one would care globally, right? But it costs 12 cents a watt to make it in India or Ethiopia or, Vietnam or Jordan or Ethiopia. So like, I just think in general, people are offended by the Chinese approach to putting out of business all industrial capacity in the world. And so I think you can get a whole bunch of countries to oppose them on that, while still saying, we don't want to import gasoline and diesel, Ethiopia. So Ethiopia decided to ban internal combustion engine cars to be imported into their country, right? Nepal has basically done the same thing. And they've said, because we don't want to keep importing gasoline and diesel, and saying we have excess electricity production. So, and they're choosing, Chinese cars. So you could imagine a more complicated world where you say, we're going to put together all these barriers to China so that they actually can't keep dumping all their product everywhere and, doing all these environmental catastrophes and human rights violations and whatever that we don't want to replicate in our countries. And at the same time, partner with them where they've got clear, extraordinary expertise.
Okay. And then all the various tools that are being talked about. We talked a little bit about stockpiling, but tiny critical minerals markets like scandium are different than bigger markets like lithium and copper. When thinking about incentives to reshore supply, what do you think of the following mechanisms to level the playing field? So, number one, price floors.
I am a more traditional, fiscal conservative. And so I would like for us to not be so interventionist into every single thing. So, price floors are fine, right? Like, I think that's fine. But we basically put in a virtual price floor for all of our loans out of LPO, right? By giving them debt for 20 years at, up to 80% of the entire capital stack. I was putting in a price floor, right? Because the US government is never going to foreclose on that loan, right? And so that is what I was doing by definition, right? So like there are multiple ways to get that done.
But when you say you were putting in a price for it, does that mean you were requiring the offtake partner to commit to a price floor?
I mean, no, I was saying that like we hired a third party, right? They gave us the data around what they thought the, you know, the cost of the metals or minerals or whatever going to be for the next 20 years. And we were accepting that as our baseline case to justify the amount of debt we were providing. And then we separately rated the loans, right? Triple C, because we said these are crazy risky loans. But like by definition, like, you know, there were going to be some lean years and some strong years, and they were going to like, so I was pricing to an average price floor, right?
Okay, so
by definition.
Okay. Like in MP's case, the government is saying, here's, you know, they're going to pay $110, right, for NdPr, you know, if you can't otherwise get that, right?
Right. So that's more explicit, right? And I don't, I mean, and so to the extent that you do like a contracts for differences, which is, I think, more what that is, then that has been a model that the Europeans have used for years.
Okay. So do you like that idea? Do you think that idea should be applied further? Because there's some people like Pilbara Minerals in Australia is advocating against price floors and saying invest in infrastructure, support roads, ports, electricity. You know, if you frame it either or, you know, between those, like, because you could argue in Nevada, for example, sediment, right? You know, if Lithium Americas didn't have to pay for all of its own infrastructure, or if some of the other developers that want to develop clay deposits over there, if there was government infrastructure support, like Pilbara is advocating for in the Pilbara region, you know, of Australia, you could permanently lower the cost of that type of asset.
Yeah, it's just look, it's your preference around your form of capitalism, right? So like this is exactly how the oil and gas industry has worked, right? Because we socialize all the cost of all of the like infrastructure in oil and gas regions, and then they can have a lower cost of extraction on the ground. Alberta has done exactly the same thing for the oil sands, right? They've socialized all the costs of the infrastructure so that they can have a lower lifting cost, right? But what you get on the other side of that is that when oil hits $125 a barrel, then those guys make a crap load of money, and they don't pay any of it back to the social infrastructure that was socialized, right? They keep all those profits. So of course they love that structure, right? But like, you know, like, and so if we do price controls and the contracts for differences, et cetera, then the public sector gets a lot of that excess cash, right? So what ends up happening is that like you take out the volatility, but you also take out the upside for the miners, right? And so it's two completely different models. I can imagine some people want to preserve their extreme profits that they can make certain years, and other people are like, I don't want to give up those extreme profits by like, you know, subjecting myself to price floors, which eventually turn into price caps.
Well, in the MP deal, I'd like to ask you about that, because there is a shared upside in that with warrants and
Totally.
you know, and if prices go above a certain bit, you know, they're on the magnet side, you know, there's shared profits there. So I think it was structured creatively. What do you think? Because I heard
it was structured creatively. The structure that they're doing, I think, is fair and balanced, but it's offensive is all I'm saying. Like, remember when oil went to $147 a barrel and Sarah Palin was the governor of Alaska, and she was like, screw you, we need a lot more of this money. And then she added like these additional taxes and fees to the oil industry. They were not happy, even though Alaska had been subsidizing the oil industry for decades around like the downside risk and the shared infrastructure. She was like, I want a little more of the upside. They were deeply offended when she asked for that, right? And so like, I'm saying that be careful what you wish for, because right now no one's talking about the shared profits and all that stuff. They're just talking about the money that MP got and the price floor they got, right? But at the time at which like lithium is back up to $85,000 a unit or whatever it is, and people are like, oh, but we're giving the US government all this stuff and we're giving them this and whatever, the private sector might be like, wait, we didn't get the upside. Like, you know, like we had to share too much of it with the US government, right? So we'll see. Like, you know, like I think everyone's excited because they're looking at the downside risk protection without the upside, you know, sharing.
what do you think about the Vulcan Elements re-element deal? There's 1.4 billion. It was just announced, and apparently, I didn't even know this company, but it was only 3 months ago that they did a Series A.
Well, this is what I'm saying to you. Like, I mean, I don't want to impugn everyone's reputation, but I think we're in this place where, I looked at hundreds of companies when I was at the loan programs office, and so did my colleagues at MESC and other places, right? And so when you look at like who's capable, who's hit the right milestones, who's done this thing, like, I don't know what the rules are within this administration. Like, I don't know whether they're saying we went through 20 of Vulcan's competitors. We've like done a techno-economic analysis. We did it with this particular firm. Like, the person who rose to the top was Vulcan, and we give this thing. I don't know what the rules are, right? And that bothers me because the Vulcan people might be awesome, right? But like what exactly are the rules? Like, who do you pay? Like, is it like this lobbyist that gets $500,000, this membership fee into Mar-a-Lago? Like, you do this, you do that, and then suddenly like comes out this thing, like, or like, what I'm talking about. Like, this industry is not filled with 100 winners. It's filled with 97 losers, right? And so figuring out who the 3 winners are going to be is super hard. Right? Are they doing that work? I don't know.
So, how did you get comfortable? If we could just finalize on this, your January note suggesting U.S. can be an exporter of lithium by 2035. How did you get comfortable with Lithium America's first of its kind, project there, as well as Ioneer, as well as Energy Source Minerals, were 3 loans that were 2 of which were conditional, and now LAC has actually gone through it under construction. How do you get comfortable that they're going to, be 3 out of the 100, lithium winners?
Well, we did a lot of diligence, right? Like, I mean, like Lithium Americas, as you know, is not using cutting edge technology, right? They are applying cutting edge technology that has been proven elsewhere and bringing it here, but they're not first of a kind. It's more like 5th of kind. I think, the Ioneer stuff, like, we looked at all of their sampling, and the lithium deposits and concentrations were actually far higher than we initially underwrote. So I was really impressed by the quality of the feedstock there. And, Energy Source Minerals, I mean, we've been working for years on, extracting lithium out of geothermal brine, right? I mean, we gave grants to Berkshire Hathaway. They proved at their facilities that you could do it. Like, we've done all of this work. And, so like, I mean, the loan programs office always takes execution risk. So, there's nothing I can do to say to you that they're going to execute brilliantly. But I can say that, like, you've met John Evans. I mean, there is no person more dedicated to the mission and who has built such an extraordinary team as John, right? Like, I mean, like, he might still fail, but not for a lack of like 10 years of ridiculously hard methodical work, right, to get to where he is today. And I think the same thing is true with the others. Now, in terms of the overall commentary, we have a lot of lithium in this country. We do. And so, we have advanced ways of using it right into our batteries. And so, like, becoming a net exporter of lithium is just math, right? You just have to like unlock the project at Ioneer, unlock the projects in Energy Source Minerals. I think that we've got a tremendous amount of capacity in the Smackover in Arkansas. I thought that the project that ExxonMobil was pursuing in Texas was really interesting. And so the problem I have, though, is now that you see the Lithium Americas deal and the way that they were treated by the Loan Programs Office as well as the White House, I don't know. Like, I mean, are you an early investor in the Smackover? Like, do you think that that is going to be replicated by this president? And then on top of that, what ends up happening is that, like, I mean, I think he's only in office for 3 more years. If you haven't gotten in early and gotten your deal by this week, right? Like, if you get a deal in 2027, is the next administration going to honor it?
Depends who's in power. If
but
it's
that's
Republican,
weird, right? The U.S. government should honor all promises, including ones made by previous administrations. But when you've got deals that are like, have a cloud over them because Donald Trump Jr.'s firm invested in it or this person invested in whatever, I could imagine there being like a huge investigation with a new administration coming in and figuring out which ones are real, which ones aren't, and like which promises they want to continue to keep. And that pains me, right? Because I want stability. Like my whole ethos in life has been to crowd more capital into these sectors, right? But it pains me that we're doing things in a haphazard way.
Yeah. I mean, well, Standard Lithium is meant to make a final investment decision in the first quarter. They said it's a function of financing and offtake. I mean, those are Republican states. They're lots of oil backed. I would think that.
So is Nevada. It didn't help near Lithium Americas, right? So like, I mean, I like, like Lord knows like what people are doing these days. Like, that's all I'm saying is I want someone to explain to me the through line and say, okay, Jigar, here's what we've learned from the first 6 deals we've done. If you come to the table with these 12 things, you are 99% assured of getting the same deal, right? But I don't know that list exists.
I know. I not yet. It's haphazard, and it's there's a race in Washington. Everybody, you're based in Washington, right, Jigar?
Yeah, I'm in
right?
Bethesda. Yeah,
yeah. I mean, everybody that I'm speaking to in Washington saying it's a zoo. It's chaotic. The rules are changing, but everybody wants to list in the U.S. Everybody wants to,
that's what I'm 10 saying.
More on the critical mineral.
Like, I mean, there's some positives out of the Trump approach. I mean, every offtake agreement person I know is like, Jigar, I'm sorry I didn't take you seriously in 23. Now I'm being forced to sign offtakes under duress because, like, the Trump administration has got me by the balls. Okay, great. Like, and as long as people are signing offtakes, that's good. But like, so, I mean, he's succeeding on some sides, and then it sounds like he's succeeding on this side where he's getting folks to crowd into our capital markets,
Well, we some of what we talked about in our last interview is that, the mining cost of capital is very low. And now you had under Biden a bit of an EV and then battery material hype cycle, and then clean energy ETFs had funds flow into them, and now Morgan Stanley has created a national security index, and because Trump's talking about critical minerals and rare earths every day, and his Besant and Rubio and Lutnick are all talking about it as well, it has created a bit of a hype cycle, especially in U.S. listed critical minerals projects. But
I just think that like the through line is still really hard to decipher, right? Look, like Lutnick has this deal with the Japanese, Westinghouse, Cameco, Brookfield, $80 billion. What? Like, how does that even work? They're like, well, we'll just spend the money until we run out. So maybe it'll fund 2 reactors at 40 billion each, and maybe it'll do 4 reactors at 20 billion each, and maybe it'll do 8 reactors at 10 billion each. I'm like, what? Really? And so now that's clearly light water, right? We've talked about HALEU and uranium and all the other stuff that like, people are trying to do too. And you're like, okay, but like there's like, I don't know, like 20, 30 names at least. I mean, there's hundreds, but there's like 20 or 30 names at least in the nuclear space that seem more advanced, right? Oklo's got this extraordinary market cap, et cetera. I still don't think that they've actually filed a completely complete NRC application into the NRC. And so, part of my challenge in this moment is these press releases are so, substantive, right? I mean, they're $80 billion, right? The CEO of Brookfield went on like CNBC and did like a 7.5-minute interview. And even now, I have no idea what the mechanics of that is and how that would work, and like whether that would satisfy Duke Energy or Southern Company to get them to say yes to building a new reactor. Right. So now are you a bull in the uranium space? I guess so. But like, it's the weirdest thing, right?
That I did have questions on nuclear. You've answered a lot of them, but what's your view on, I guess, those reactors versus SMRs, or the approach to announcing those deals versus SMRs?
We published a liftoff report before we left office on nuclear. It was very clear that AP1000s are like 30% cheaper than SMRs. No one's ever argued about that point. But it doesn't make any sense to build AP1000s unless you build 2 in one place. and preferably 4 in one place. Building 4,000 megawatts of power in one place in the grid is extremely difficult to do, right? It requires a lot of work and planning. We have a lot of coal plants that are shutting down, regardless of what Trump says, just because they're old and require $1 billion to keep running. And most of those coal plants are 1,000 megawatts. So building 3 or 4 SMRs there might be more cost effective than building one nuclear plant in one place. You got to build a pair, right? And so, and it might fit better into the grid. You could also see like, integration where some of the heat gets used by industrial facilities, et cetera. So I don't think anyone should believe that SMRs are cheaper than large scale reactors, but they might be fit for purpose for that particular location.
Okay. And last question, thoughts on canceled DOE deals like the Grain Belt Express, Ascend, American Battery, ICL, Novion?
So this is the problem that the Trump administration has. Like, it was always very clear that a third of the projects that the Biden administration awarded money to weren't going to meet their milestones to meet, the next stage, right? And we usually would give them more grace period, like give them 6 months to cure. I think the Trump administration has said, we're not giving you any grace period. You miss this milestone, we're going to cancel your award, right? Like, but I don't know which ones were canceled because they didn't meet their milestones and which ones were canceled because he hated it. Like, it was very clear that Grain Belt Express was one wealthy landowner calling Josh Hawley, calling the president saying, I don't want to do this deal. And you're like, at a time when we need to do AI load growth, and this transmission line was 13 years in the making, like, this is what we do with new transmission. Like, that one was clearly just like arbitrary and capricious, right? But on this side, I think most of the grants that they canceled are probably ones that weren't meeting their milestones. But you'll never know because they had no process by which to explain it to you in a transparent and open way, right? Because in some ways, they like the chaos and the cruelty is the point, right? And so like it bothers me because the only thing I care about is capital formation. It is so hard to do capital formation in this sector that, like, why would you screw over these investors over here, right, without giving them a good story? And then, like, I don't know, are they going to turn around and invest even more into this sector, or are they just going to leave stage left?
Mm-hmm. I know I said the final question. Just one last one is just on Canada.
Yeah.
We've been beating up Canada. Canada's right next door. They have all these critical minerals. They just announced, I don't know, $1.5 billion up to $6 billion as part of a G7 initiative in projects on Halloween. Here we are signing deals like in Kazakhstan for tungsten, private companies, but like, where does and Canada has tons of lithium that's more conventional hard rock in Quebec and Ontario. I've always thought of North America rather than just kind of US. You've made some comments about, the processing of, hard rock. What are your general thoughts about, friend-shoring? This is our best friend, it's our biggest trading partner. And, we have a US Australia framework. We got a US Japan framework. We got the Caucasus now, Greenland, Ukraine, but, a big, F you to Canada so far. What do you make of where that's going? Like the potential of partnership there and what's happening?
I'm hopeful, right? I think Carney has been very slow to implement all of his programs. And so he has this major projects office. I think he's doing a bunch of pipelines that go right to Vancouver, which, I don't think makes a whole lot of sense, frankly. I think he should figure out how just to send that product down to the United States for processing. But, I think the bigger challenge I see with Carney is that he hasn't yet told everybody what he wants to do. Right. So I think he's still staffing his government. I think they just got some of the chiefs of staff, which are important positions in the Canadian government, last month. When I talked to the Canadian Growth Fund, they were not clear with me about what they're actually funding and why they want to fund it and what the criteria is. Because I asked them, I was like, well, what kind of merchant risk can you take? What prices are you assuming? Right? Do you need a projects finance deal? Part of the problem with Australia and Canada broadly is their pension funds have tons of money and they invest in a lot of infrastructure, but they're very conservative in the way that they underwrite deals. They really want investment grade deals. And that's not what we have right now, right? And so Carney hasn't said that I'm giving these people the license to do non-investment grade deals for strategic reasons. And here's how we're going to, like, we did that in the loan programs office. I mean, in general, our overall portfolio was investment grade, but, I had a good 12% of my deals that were, double B or lower. Right. And so, like, those are real deals because, $100 million goes a long way in some of these sectors. Right. But Carney hasn't said that they're going to change the way in which the Canadians take risk. Right. And so unless they say that, then I don't actually know what to pitch him. I don't actually know what to take to him and say, here's my best idea. Because as you know, some of those ideas you came up with are not ideas that have a full de-risked project finance structure.
Right. Okay. Thank you, Jigar, for a very wide-ranging conversation. I when we interviewed you nearly 3 years ago, we had hoped to interview you every 6 months. So I still hope that now that you're out of office, maybe we could have you back in
I'll be
6
more of a
months' time
regular
and kind of catch up. Okay.
I appreciate
That's great.
it.
And again, encourage all our viewers to listen to the Open Circuit podcast as I do every Friday, to hear Jigar and his colleagues. Thanks and have a great weekend.
Thank you. Take care.
Thank you.